We looked at MacLeod Lake, and as I looked at that, I looked at the shell. I said, wait a second, they've got a pretty good project here in Quebec. Let's look at it a little more careful. I've been involved with molybdenum since 1975, so I knew a little bit more about it than maybe most people did. And I saw this and I said, well, it's not a big project, but boy, the grade is wonderful. It's got a net present value in the 100 to 300 million range. And depending on the prices you assume for the commodities, copper and molybdenum, and an internal rate of return in the 25 to 35% range. In 2006, when I came on with the company, I noticed that there wasn't a lot of people around doing a lot of work on moly, and moly had gone from $3 to $40 a pound over the previous 3 or 4 years. And everybody was getting very interested in molybdenum. So I said, well, I know a lot of folks in the business. I've been around it for 30 years. So I said, well, okay, I'm going to do an article, a study on molybdenum supply forecasting. And I looked at every potential new mine in the world, as well as the existing producers, and came up with a forecast of existing producers and probable new mines that would come along. At that time, the price held up, but then in 2008, everything crashed, and moly went to $8. And what I said then was that because a lot of production falls out below about $13 a pound, and most of it in China, they have some very high cost mines, plus the fact that demand is growing and will continue to grow. We took a dip there right at the end of 2008, early 2009, but then it's picked up again. And I said in late 2009, when the price was $8, that it would come back up into the $15, $16 range. And by middle of 2010, that's where it was. And as the demand has grown typically over the last 35 years, about 4% a year worldwide, a little bit faster than overall economic growth, that we're going to need new mines.